Some of the best tech investments aren't the ones making headlines, but the silent giants powering our digital world. These companies quietly dominate their industries, compounding wealth for patient investors. In this video, I'll reveal 3 foundational tech stocks to buy right now, each with near monopolistic control and deep durable moats. These aren't just trends, they're the infrastructure of the global economy, built to last and grow. Hit the like button, share your thoughts in the comments, and subscribe for more investing insights. Let's dive in. First up is UiPath, ticker PATH, the often misunderstood but undeniably powerful leader in robotic process automation, or RPA. While many investors overlook this company, those who dig deeper see a business that's quietly transforming the way the world works, one automated process at a time. UiPath isn't just another tech stock, it's a company at the heart of a technological revolution that's reshaping entire industries. UiPath's software robots are designed to take over repetitive, rule-based tasks that eat up valuable employee time, think data entry, invoice processing, or onboarding new hires. By automating these mundane activities, UiPath helps companies save millions of dollars annually, while also freeing up human talent to focus on creative, strategic, and high-value work that drives real business growth. This isn't just about efficiency, it's about unlocking human potential and enabling organizations to do more with less. But UiPath's platform goes far beyond simple automation. It's built to integrate cutting-edge artificial intelligence and machine learning, allowing it to handle complex, unstructured processes that traditional automation tools can't touch. The platform can even discover new automation opportunities by analyzing workflows and suggesting areas for improvement. This means UiPath isn't just automating what you already know, it's helping you find new ways to work smarter, faster, and more effectively. With features like process mining and task mining, UiPath can map out how work actually gets done across an organization, surfacing inefficiencies and bottlenecks that might otherwise go unnoticed. This proactive approach to automation is a game changer, giving businesses a roadmap to continuous improvement and digital transformation. Once UiPath is integrated into a company's operations, it becomes the digital backbone, the operational nervous system that connects people, processes, and technology. This deep integration creates a sticky ecosystem, making it extremely difficult for customers to switch to competitors. The more a business automates with UiPath, the more embedded the platform becomes, driving long-term loyalty and recurring revenue. This stickiness is reflected in UiPath's impressive net retention rate, which consistently shows that customers not only stick around, but actually increase their spending year after year. As organizations expand their automation initiatives, they rely on UiPath for more processes, more licenses, and more advanced features, creating a powerful flywheel effect for growth. In today's world, where artificial intelligence is rapidly advancing, UiPath is uniquely positioned as the essential bridge between data-driven insights and real-world action. While AI can generate valuable recommendations, it's UiPath that turns those insights into automated workflows, making it the action layer for the AI revolution. As more companies adopt AI, the need for seamless automation only grows, and UiPath is right at the center of this shift. Financially, UiPath is on a strong trajectory. The company is steadily moving towards sustained profitability, already generating positive free cash flow, a rare feat among high-growth tech firms. At the same time, UiPath continues to invest heavily in research and development, ensuring it stays ahead of the curve as automation and AI technologies evolve. This balance of financial discipline and innovation is a key reason why UiPath stands out from the pack. Despite these strengths, the market has often lumped UiPath in with unprofitable, speculative tech stocks, overlooking its improving fundamentals and growing customer base. But beneath the surface, the business is only getting stronger, with a resilient model that's built to weather economic uncertainty and capitalize on long-term trends. The opportunity ahead is massive. UiPath operates in a total addressable market worth tens of billions of dollars as enterprises across every sector race to automate and digitize their operations. With a clear technological lead and a reputation for reliability, UiPath isn't just selling software tools, they're enabling strategic transformation on a global scale. Their end-to-end platform covers the entire automation journey, from process discovery and documentation to building, deploying, and managing software robots. This makes UiPath a true one-stop shop for enterprise automation, reducing complexity and accelerating time to value for customers. At the helm is visionary founder Daniel Dines, whose relentless focus on innovation and execution has shaped UiPath's robust go-to-market strategy. Under his leadership, the company has built a culture that values creativity, customer success, and continuous improvement, key ingredients for long-term industry leadership. Of course, There are risks. Competition in the automation space is fierce, with both established tech giants and nimble startups vying for market share. Execution is critical, and UiPath must continue to innovate and deliver value to stay ahead. However, their significant head start, deep customer relationships, and the complexity of enterprise sales cycles create real barriers to entry for would-be challengers. UiPath currently carries a market capitalization of roughly $7.66 billion, trading at a price-to-earnings ratio of about 34.14, with earnings per share at 42 cents. In 2024, the company generated approximately $1.3 billion in revenue, but it remains unprofitable, reporting a net loss of roughly $89.88 million. That tells us UiPath is still very much in a transition phase, where investors are betting on long-term automation adoption and margin expansion rather than near-term profitability, which explains why valuation remains elevated despite negative net income. For long-term investors, UiPath represents a coiled spring, undervalued today, but with the potential to become absolutely essential to the future of work. As automation becomes a core part of every business, UiPath's role will only grow more critical. If you're looking for more exclusive stock tips, deep dive analysis, and a community of like-minded investors, be sure to check out our Patreon community. The link is in the description below. Don't miss out on the latest insights and opportunities. To recap, UiPath is a dominant leader in a massive, rapidly growing industry. Its sticky product, improving financials, and visionary leadership set it apart from the competition. And with the stock currently trading below its true potential, there's a compelling case for long-term upside. As digital transformation accelerates across the globe, UiPath is selling the shovels in a digital gold rush, empowering businesses to mine new value from their data and processes. That's why every long-term tech investor should have UiPath firmly on their radar. The company's combination of innovation, execution, and market opportunity is rare, and the upside could be significant as automation becomes ubiquitous. The story is compelling, the technology is best in class, and the long-term growth potential is undeniable. UiPath is not just riding the wave of automation, it's helping to create it. UiPath is a foundational piece for the future of work, enabling organizations to adapt, innovate, and thrive in a rapidly changing world. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today, and take control of your financial future. Ready to discover the next tech giant poised to shape the future? Let's move on and explore what's next. Next up is Alphabet, ticker symbol GOOGL, a company that serves as the digital backbone of the modern world and touches nearly every aspect of our online lives. From the moment you wake up and check your phone, to searching for information, navigating with maps, or watching videos, Alphabet's products are woven into the fabric of daily existence for billions of people. But Alphabet is far more than just Google search. It's a data and artificial intelligence powerhouse, collecting and analyzing insights from billions of daily interactions across its vast ecosystem: search, YouTube, Maps, Gmail, Android, and beyond. Every click, query, and video watched feeds into a massive reservoir of data, fueling smarter algorithms and more personalized experiences. This data advantage creates a powerful virtuous cycle. More users generate more data, which in turn makes Alphabet's products smarter, more intuitive, and increasingly indispensable. As these products improve, they attract even more users, reinforcing Alphabet's dominance and making it harder for competitors to catch up. Google Search alone commands over 90% of the global market share, making it the world's default gateway to information. This dominance isn't just about convenience, it's the foundation of the most powerful digital advertising platform ever created, connecting businesses with billions of potential customers in real time. The digital ad business is Alphabet's financial engine, generating enormous cash flows that fund ambitious investments in artificial intelligence, cloud computing, and a range of moonshot projects. This steady stream of revenue allows Alphabet to experiment, innovate, and stay ahead of the curve in a rapidly changing tech landscape. Then there's YouTube, the world's second-largest search engine and a cultural phenomenon in its own right. With over 2 billion logged-in users each month, YouTube is not just a platform for entertainment, but also a powerful educational tool, a news source, and a growing juggernaut in digital advertising, especially as more people watch on connected TVs. Google Cloud, once a distant third in the cloud race, is now profitable and growing rapidly. Leveraging Alphabet's deep expertise in AI and global infrastructure, Google Cloud is increasingly competing with industry giants like Amazon Web Services and Microsoft Azure, serving businesses of all sizes with cutting-edge technology. Alphabet's competitive moats are massive and multifaceted. Its unmatched data, global infrastructure, and an ecosystem of products, Android, Chrome, Maps, YouTube, and more, work together to reinforce each other, locking in users and making Alphabet's services nearly impossible to avoid in the digital age. Beyond its core businesses, Alphabet is constantly looking to the future through its other bets. Projects like Waymo, its self-driving car division, have the potential to revolutionize transportation and become major growth engines in their own right, adding even more value to the company's already impressive portfolio. Financially, Alphabet is a fortress. The company boasts enormous cash reserves, robust free cash flow, and a consistent program of share buybacks. This financial strength gives Alphabet the flexibility to weather economic storms, invest aggressively in innovation, and return value to shareholders. Despite its massive size, Alphabet continues to post impressive growth, driven by the ongoing expansion of digital advertising, the rapid rise of its cloud business, and the integration of AI across its entire product suite. The company's ability to adapt and innovate keeps it at the forefront of the tech industry. When you look at the numbers, Alphabet's stock trades at a reasonable valuation, especially considering the strength of its core businesses, its dominant market position, and its massive cash hoard. For investors, this combination of growth and value is rare among mega-cap tech companies. Of course, regulatory risk is real. Alphabet faces ongoing scrutiny from governments around the world and has weathered billions in fines and high-profile antitrust cases. Yet, the company has proven resilient, and some analysts even argue that a forced breakup could unlock hidden value for shareholders by allowing its most promising businesses to shine independently. Some fear that advances in AI could disrupt the traditional search business, but Alphabet is already a global leader in artificial intelligence. The company is rapidly integrating generative AI models into its products from search to workspace, ensuring it remains at the cutting edge of technology and user experience. The sheer cost, scale, and technical expertise required to compete in AI and cloud computing only serve to strengthen Alphabet's competitive position. Few companies on Earth can match its resources, talent, or infrastructure, making it a formidable force in the next era of technology. With a market cap approaching $3.99 trillion, Alphabet trades at a price-to-earnings ratio of around 32.58, with earnings per share of just over $10. In 2024 alone, the company generated roughly $350 billion in revenue, producing an extraordinary net income of about $100.11 billion. These numbers highlight Alphabet's dominance across search, advertising, cloud, and artificial intelligence, and explain why investors continue to assign it a premium valuation despite its sheer size. In summary, Alphabet is much more than just a search engine. It's a collection of near monopolies, a high-margin cloud business, and a portfolio of moonshot projects, all backed by a fortress balance sheet and a culture of relentless innovation. It's hard to imagine a future where Alphabet isn't even bigger, more influential, and more deeply embedded in the digital economy than it is today. The company's reach and impact are only set to grow as technology becomes an even greater part of our lives. For long-term investors, Alphabet stands out as a core holding, a compounding machine at the very heart of the digital economy, with the potential to deliver growth and resilience for years to come. So, which of these three companies do you think has the strongest moat? Share your thoughts in the comments below. I'd love to hear your perspective on the future of tech giants like Alphabet. Our final pick is Salesforce, ticker CRM, the undisputed king of cloud-based enterprise software. Founded in 1999 by Mark Benioff, Salesforce has grown from a bold startup into a global powerhouse, fundamentally transforming how businesses manage their customer relationships and operations. Today, Salesforce is not just a software provider, it's a mission-critical partner for organizations of all sizes, from nimble startups to the world's largest enterprises. Salesforce pioneered the software as a service, or SaaS, model, making it possible for companies to access powerful business tools over the internet without the need for expensive hardware or complex installations. Their flagship customer relationship management platform is now the industry standard, helping millions of businesses streamline sales, service, and marketing, all from the cloud. For millions of businesses worldwide, Salesforce acts as the central nervous system for their operations. It connects sales teams, customer service reps, marketers, and executives, providing a unified view of every customer interaction. This level of integration empowers organizations to deliver personalized experiences, drive growth, and respond quickly to changing market demands. One of Salesforce's biggest advantages is its high switching costs. Once a company adopts Salesforce, moving to a different platform is not only expensive, but also risky and disruptive. This creates incredibly sticky, recurring revenue streams, as customers are deeply invested in the Salesforce ecosystem and its custom workflows. Over the years, Salesforce has expanded its platform through a series of strategic acquisitions. By bringing MuleSoft into the fold, Salesforce enabled seamless integration with countless other business systems. Tableau added world-class analytics and data visualization, while Slack brought real-time collaboration and communication to the platform. Together, these acquisitions have helped Salesforce realize its Customer 360 vision, a unified 360-degree view of every customer. The Salesforce App Exchange is another key differentiator. With thousands of third-party apps and integrations, it creates a powerful network effect. Businesses can easily extend Salesforce's capabilities, tailoring the platform to their unique needs and workflows. This thriving marketplace not only adds value for customers, but also attracts a vibrant ecosystem of developers and partners. As digital transformation accelerates across industries, Salesforce stands at the forefront, enabling companies to modernize how they engage with customers. From automating routine tasks to providing deep insights into customer behavior, Salesforce helps organizations stay agile and competitive in a rapidly changing world. In recent years, Salesforce has shifted its focus from growth at all costs to a more balanced approach emphasizing profitable growth. The company has expanded its operating margins, generated robust free cash flow, and begun returning capital to shareholders through share buybacks. This financial discipline is a sign of Salesforce's maturity and long-term commitment to delivering value. Another major growth driver is artificial intelligence. Salesforce's Einstein platform leverages the company's vast proprietary data to deliver predictive insights, automate processes, and personalize customer experiences at scale. From sales forecasting to customer service automation, AI is woven into the fabric of Salesforce's offerings, helping clients unlock new levels of efficiency and innovation. At the helm is co-founder Marc Benioff, whose visionary leadership and commitment to a culture of innovation have kept Salesforce ahead of the curve. Benioff's focus on values like trust, customer success, and equality has shaped Salesforce's identity and inspired loyalty among employees, customers, and investors alike. Of course, there are risks. Competition from tech giants like Microsoft is fierce, and Salesforce must continue to innovate while sustaining its margin expansion. But so far, its robust ecosystem, relentless execution, and deep customer relationships have kept it firmly in the lead. The case for Salesforce is compelling. It's a near-unassailable leader in a mission-critical software category, with high switching costs, a powerful network effect, and a renewed focus on profitability. Its platform is deeply embedded in the operations of its customers, making it an essential part of the modern business landscape. The company carries a market capitalization of approximately $216.2 billion and trades at a price-to-earnings ratio near 30.32, with earnings per share at $7.49. In 2024, Salesforce generated nearly $34.85 billion in revenue, translating into net income of about $6.19 billion. This reflects a business that has successfully shifted its narrative from growth at all costs to disciplined profitability, while still maintaining strong enterprise demand for its cloud-based customer relationship management platform. For investors, Salesforce represents a blue-chip technology stock with the potential to compound shareholder wealth for years to come. Its combination of innovation, scale, and financial strength makes it a cornerstone holding for any long-term portfolio. In short, Salesforce is the backbone of modern business, driving digital transformation, empowering organizations, and shaping the future of enterprise technology. There you have it, UiPath, Alphabet, and Salesforce, three tech giants with deep moats and long-term growth potential. These aren't speculative bets, they're the pillars of our digital world, built for stability and compounding returns. Focus on quality businesses, not market noise, to build lasting wealth. Each of these companies is hard to replicate, generating predictable revenue and strong cash flow. Like, comment, and subscribe for more investing insights. Thanks for watching. See you in the next one.